If you find yourself taking losses after losses going against the trend, in this video I want to show you a very good strategy on going with the trend, recognizing when that new trend has formed. See, this trend is going down. People who want to go short will want to try to short the pops. Normally this is a good idea because if you short pops here, you would have covered very well. If you look at the amount of drives that it drove lower, this is called the 3-drive pattern. 1 drive, 2 drive, 3 drives. Sometimes it only happens 2 drives. 1 drive, 2 drives. You want to count the ones that are really extreme. Big candles like this, these are great drives. Next, you have to realize that candles are not really selling the way that it used to be. In fact, as you look at the real-time action like right now, every drop is bought up. And when you see this is the case, you go and get long. The same would happen for the short, but I mostly like to use this strategy for the long trade. The reason is because dip buyers would like to buy dips going back up after a hard sell like this, and short sellers who shorted these pops, when it sees that it's going up, they will have to buy to cover, meaning that both sides of the traders are buying the price action up. One important thing you have to know though, since not every strategy works all the time, you have to have a very tight stop for this strategy. Because if you don't and you keep adding, you're gonna blow your account. This strategy is also best used when you're scalping for only 10, 15, or 20 points. The reason for that is because you never know when the trend reverses. You're just trying to capitalize on the fact that people are getting squeezed and dip buyers are buying it up. I personally call this the squeeze long. Guess how I learned this strategy? I learned it the hard way because I was a short getting squeezed. So I tell myself, hey, if I'm getting squeezed, let's join the long. And it works amazingly. I'm gonna get long here because it's the 3-drive pattern I just discussed on this video. As you can see, every dip is bought immediately. When you start to see action like this, that the price can't go down, then this is a confirmation of the 2-drive or 3-drive strategy. The reversal strategy that you have to recognize. However, you do have to have a very tight stop, because if you're wrong on this strategy, you want to make sure that it doesn't go against you like this. I sold 1 contract already on that pop because it was a good 15 points. I moved my stop to break even just to make sure I lock in profits on this trade. On dips, I'm gonna add because I want to continue adding onto this trade as is winning. Just with 1 mini and 10 points, you have $200. If you're trading a small account like 25 or 50K, you can just lock it in and call it a day. The characteristics of this strategy is that you see that candles are not selling hard like it used to be right here. In fact, every dip is being bought and it rarely cuts below previous candles. It may cut down a little bit, which is an opportunity to add. However, if it goes all the way down here, then this strategy is over. As you see, I just added to my trade because I want to buy these micro dips to sell for the pop. Because both sides of both short sellers and dip buyers are trying to buy to go higher. Almost got stopped out right there, and I respected my stop. I added another 1 contract, and here it is, here's the pop. Unfortunately, the ATM strategy gave an error and you couldn't see the exact take profit time. But as you can see on this P&L, from the 4 grand P&L now to a 5 grand P&L, I made about $1,500 with 3 contracts. I sold 1 along the way, but this is how you execute this strategy.